Today I'm going over Hormel Foods, ticker symbol HRL, Hotel Romeo Lima, and why I'm going to be getting more equity in this position. Let's get to it. Alrighty, so we have the 1-year chart for Hormel Foods. Yes, it is down quite a bit. If we look at the 10-year chart, it is down a lot. We can see it had some big downward moves, and it has some consolidation afterwards. We have a little consolidation here. And yes, it doesn't look like the most attractive stock for many. For me, it's the opposite, especially when I'm going to look at some of the fundamentals. And I don't really see too much of any chart pattern here other than the triangles going down. Not too much here, it's just consolidation. So there's nothing that I'm going to look at, such as simple moving average, VWAP, MACD, crossovers, RSI, none of that. I'm not even going to consider that. This is just on my thinking, what I would view as some common sense looking into it. And it's not going to rely too much on the chart other than me knowing that it's down a lot. And of course, to make money, I want to buy when it's down. I want to be buying when it's high because it's looking great. I want to buy it when it's down. It might not look so good to a lot of folks, but as long as it looks good to me. So here I have a report on a reduce or sell rating. I would like to note that their accuracy is less than 50%. So half the time, they're not even half the time, they're correct. So that's not looking good. Obviously, yes, I do see that it's down quite a bit. They did get this one correct, and it was mirroring the SP 500. Nothing wrong there. I don't have any problem with it being down. They go over kind of why they think it's going to be lower and why it's still sell and reduce. I don't wait too much for a lot of them to say buys, because by the time they say it's going to be buy, everyone's already going to get into it, and I've lost my opportunity to make more capital gains. Here is another sell or reduce rating, and I would like to point out some of these things on why I'm going to be buying more Hormel Foods. So their opinion is to sell due to a weak macro environment, incremental investments, operating expenses, yada yada. It keeps going on and on. One reason I go into all this and I read all these different reports because I can find the inconsistencies that just don't make sense and makes me want to buy more. So this is one of them. They have a low visibility into Hormel Foods' outlook, given its business is highly volatile and often influenced by pork and turkey commodity prices. Yes, commodity prices are very volatile, and it makes a very good point. But in this exact same analytical report on why they're saying to sell, let's look into this part. To ensure a steady supply of hogs and turkeys and keep the cost of products stable, Hormel Foods has entered into contracts with producers for the purchase of hogs and turkeys at formula-based prices over periods up to 5 years and 9 years, respectively. Hormel Foods has also entered into grow-out contracts with independent farmers to raise turkeys for Hormel for periods up to 25 years. Under these arrangements, Hormel Foods owns the livestock, feed, and other supplies, while the independent farmers provide facilities and labor. In addition, Hormel Foods has contracted for the purchase of corn, soybean meal, feed ingredients, and other raw materials from independent suppliers for periods of up to 2 years. So this whole section right here of what Hormel Foods is doing, which looks very smart based on formula-based prices for the next 5 to 9 years for hogs and turkeys, respectively, contradicts what is said right here. And it's in the same report. It's not two different reports. Yes, it is volatile, but they're mitigating the volatility in all this right here. They're working with independent farmers, and they're doing different things for good amounts of time. It's not months. This is years and years. One of them is even 25 years. And they're pretty much, if you think of a monopoly, think of how monopolies started, they're going all the way to the basics. They're going to corn and the feed ingredients, other raw materials. They're not just getting into turkeys and hogs and other meats. They're getting into what feeds those critters. So while they may be getting into the selling product of the actual animal commodity itself, they're getting into the commodities that feed the animal, mitigating their risks, which is very smart in my opinion. That's why one of the reasons I'm going to be getting into this position more, because it's down. It's down a lot. Going in more, they have more of a hold. And they're just going over more things. Another highlight that I want to look at, the current debt to equity ratio is 0.45 and is below the subsector average, implying that there has been successful management of debt levels. Despite the fact that Hormel Foods' debt to equity ratio is low, the quick ratio, which is currently 0.68, displays a potential problem in covering short-term cash needs. Again, short-term. I'm looking for long-term on Hormel Foods. Yes, would I like to sell it eventually? Maybe. If it goes up soon, I might sell it soon. But this is a consumer staple. If we're having this hard or soft landing, whatever actually happens, we hear the economists and analysts saying it's going to be a soft landing, it's going to be a hard landing, there's going to be no landing at all, it's just going to fall through the bottom. There won't be a support level to hold us up, or things are just going to keep going up. Either way, I, for myself, believe Hormel Foods is a great buy, and I'll be buying more, because if there's a recession, who's going to get more money? Apple or food companies? Is someone going to go out buy a new Apple phone every time they come out with something new? Or are they going to feed their family for the next month? Same thing with something such as Nike. Is someone going to buy $400 pair of Nike shoes when they're barely scraping by? Or are they going to pay for food for a few weeks or a month? That's a lot of money spent on a pair of shoes when you could get food instead. Going back to the prior report, I would also like to note one thing here. Walmart. Walmart accounted for approximately 15% of consolidated gross sales, less returns and allowances, and it goes on and on. 15%. That's a lot. That's a lot going to Walmart. So if you own stock in Walmart, which I do have some ETFs that hold stock in Walmart, not only is Walmart going to make money, but they're going to show that Hormel Foods is going to make money because they're selling Hormel Foods. They're different products. They're brands. So going to Hormel Foods' website to look at their brands, obviously there's a lot of things that have Hormel stamped on them, such as Hormel chili. That's all over the place, not only Walmart, but local grocery stores. Corn nuts, Embasa, Hernandez, La Victoria. I buy these things when I'm making different Mexican meals. I've seen all these, most of these, not all of these, a lot of these at the stores. Do I buy them? No, might not be in my taste, but I know a lot of people do. Skippy. Skippy's huge. So looking at all these, this is going to be what folks would be more likely to buy. Not everyone, but most people would buy food instead of buying discretionary products, such as phones, new sneakers, other stuff like that. Instead of getting a brand new car, folks are going to be more likely to fix up their current car and buy food for their family. So that's what I'm looking at. If we're going to be looking at a possible downturn in the economy, then in my mind, it would be a smart move for myself to go into Hormel Foods and other consumer staple brands that would be selling a lot of food, because that's what everyone's going to need compared to other products and from other companies. Back to our 10-year chart for Hormel Foods. Yes, we're in a bit of consolidation here. I've opened positions in this general area, not up here. I believe I had some here and I sold right up here. But it's come back down. I was buying, very happy to buy more. It's at a solid 3.5 yield. And as it keeps going down, if it hits more of the 30 level, anything below 30, I'm definitely going to gobble up. But it's going to make good dividends, and it's food. Everyone's going to need food. Not everyone needs a new iPhone. Not everyone needs new sneakers. Everyone needs food. So I'm going to buy this more because this is the tactic I enjoy using, especially for downturns. I did this in 2020, and for me, it worked fantastic. I love buying stuff when they're down and using just some common sense that everyone's going to need food. When you find out what people need and the economy turns down, what companies excel? It's what people need.